All right. Good. What is this? Remind me later. Good Friday. Thank God it's Friday. I don't know if you trade on Fridays, but it looks like it could be an interesting day to target, depending on how New York opens. The weekly open right here, which is above these highs. But I'll show you in a second. I don't know what I'm looking at here. Let me just see if this is an interesting and important. Yeah, okay, this is old. This is old. Well, previous day low. Let me see if we can clean this a little bit. I'm just gonna delete this. Okay, so here we are. This is the 1 hour time frame, and the most important thing I'm looking at is these equal lows. That is very interesting because equal lows tend to be a magnet for algorithms. Just the same way that these equal lows right there, when price was all the way up here, it went to target them, right? And the thing is that you got these equal highs over here, sort of relative equal highs, not exactly equal, but relative equal highs. So as price creates these ranges, remember internal and external liquidity. But as I see that, it becomes a point of interest. And just below the daily low, previous daily low, we have the monthly open, which is also an algorithmic price. And not to mention all the way down here the previous week's low. It is uncomfortable. It is ranging up and down, up and down. It's with all the manipulation that's been going on by Trump, and he just recently said I'm gonna fire Powell, and then gold just spiked like crazy. And then no, I'm joking. I can't do that. Like, what the hell is this, a game? Now here we have equal highs right here. All of these are this is a big pool of liquidity. So it's tight because if you think about it, this is external liquidity to all of these internal ranges. And this, as a matter of fact, this is external liquidity to all these internal ranges, right? So what do I mean by external and internal range? This is an external range because it's a wide range. It went straight up, and the way it came back, it made little ups and downs, ups and downs. So those are internal ranges within this wider range. So to this external low, we have these two internal lows and these two internal highs if you implement these external highs over here. So notice how it's fractal. You can go as you zoom in, you have more and more internal and internal and internal liquidity. So what you have to see is, where has price taken liquidity already? So basically that's down here. It already took these lows and flipped, and it closed strongly. And look at the V shape over here. Basically we have a V right here. Within this is a 1 hour, remember that. So within this 1 hour candle we have a 1, 2, 3, 4, 5, and price is coming up. Price respected here. Look at those two lows. You see that? I'm not making this up, and this is algorithmic. These equal lows are a magnet for the market right now. And so I don't know. I like to believe that gold is going to continue going up because it already grabbed liquidity here. But before it does that, I think it's going to want to come down. New York is not going to buy price at the top. It's going to want to manipulate and shake off all the early buyers, which are anybody who's buying here and who bought here. So we have basically this consolidation that we could say we are seeing a manipulation. It could continue going higher. I don't know exactly where, but it all depends on the time. So whenever New York opens, by 10 in the morning, it should start reversing if this is the picture. I'm going to explain the other scenario, but if that's the picture, by 10 in the morning, we should have the distribution. So if it starts reversing, we have manipulation. The distribution would probably look something like this, and maybe target these lows. Remember, the principle of the V shape is the lows it manipulates should respect and it should hold in the future. So if we go to the 15-minute time frame, this is the V, and these are the lows that the market manipulated. So it's a point of interest. It's a technical area. That means is also a magnet in the future. Whether price beams through it and doesn't care about it, that's outside of the picture. That's, you don't think about that. Just think of the fact that it's an area that hasn't gotten tested, and also it's an area that has got this big imbalance over here. So in the 30-minute time frame, we have that imbalance, which is very likely for a market to at least want to retest, right? So I don't know if I can edit this to get this out of the way like this. Beautiful. Okay. And then lock it. Good. Okay, so here we are. We have this potential manipulation that we're looking at, and we've also seen how price goes up, right? It kind of curves a little bit to the upside, and then it makes a manipulation. So we could see the A shape soon, something like this. It'll start coming up, and then we have a little 1, 2, 3, 4, 5, and it starts reversing. And by 10 in the morning, price might want to retest some area it broke and distribute. So as you see price going up, remember, mark those candles, mark the lows of the candles, because those are going to be the future points of interest where when price breaks them. That's break of structure. You may know this, obviously. So as price continues to make these little lows up, little stairs, it's going to use it in the future. Okay, so here we are sort of mapping this out, and like I said, just based on how price is right now, because it's so high, I think New York is gonna open and make a little A shape near the opening, and then start coming down. By 10 in the morning, they'll probably retest some previous broken support, and then target these lows into this imbalance. Okay, this is what I'm probably gonna expect. Of course, I have to wait, and the reason why I would say it'll reverse here is because we got these highs right there, and the same way that price leaves those equal lows, is probably gonna leave those equal highs right there. So it'll probably just kind of peek its head over and then reverse hard, unless, but I don't want to get into the unless yet. Now, what if this is the picture? What happens then? Okay, well, we have potentially these lows as initial targets, and maybe this low also, right? Because this is also an equal low, and inside of here is another imbalance, which is in a bigger time frame. We have the 4-hour. That imbalance is right there. It's so beautifully set up, if you see it, right? So the market comes there and says, nope, we're gonna bounce, so that's a support. It's a support. So whoever bought and whoever has been holding long positions, raise the stop loss. That becomes a big point of interest. Okay, and so this is another interesting, and look what's in there, the monthly open. Now, remember I've talked about how price is algorithmic, and I'm here to prove this to you right now. I just set up a rectangle with a middle line on it, and basically a few ticks away you have the monthly open. The 50% of the imbalance has the monthly open. That's not a coincidence. And so this is also a big long-term area to buy if price indeed reverses again, right? Just the way it manipulates bears is going to manipulate bulls who've been buying, say, okay, this is it, I'm going to buy, and then go, yeah, fuck you all. And that's been annoying, because this would have been a great place to buy and hold. This one also, but as it makes those intentions and moves to go up, it reverses back down. It makes an intention to go up and reverses back down. It's making another intention to go up, and it might reverse back down. We have to also just play with the odds that the market is showing us. Okay, so initial target for today, if we see New York reversing, you target these lows, which is the Asia low and the London low, into this imbalance, and potentially these two lows might get respected. Might get respected because it's a technical area, so that's going to be a strong technical support. If price is closing, if you see closing below this area with no rejection wicks, then it's likely it'll want to take this previous day low into the monthly open imbalance, which is a longer term, much more convenient price to buy at, right? Let's put it that way. And there is where you can see a nice big reversal. And so what happens is price leaves these two highs as a interest area for the future, because it's got these highs to target and these highs in the past. And then obviously you have, as a matter of fact, if we go to the 4-hour, look at these equal highs. Look at these equal highs. You see, I'm telling you, the market does this. It's engineered liquidity, and so these two highs are serving as a resistance, and you can bet so many orders right here, whether it's a buy stop order, a sell limit order for people that want to sell, right? They're saying, no, this is it, this is the top, I'm going to sell on resistance. Or buyers who say, this thing, as soon as it pops through that, I don't want to miss the next move, so I'm going to buy it there, which is also probable. But notice how, as you zoom out, you see the same mechanics. And now the only thing I like about this zooming out and the daily and 4-hour time frame is that there's higher lows. That's the only thing that's kept me bullish, because other than that, yes, this is a lower low in terms of these ones, but we have this external lower low and that higher low. So I'm still looking at this trend line right there. Okay, that is holding, and that bounce yesterday was perfect on that trend line, basically. You see this? So that was a good textbook buy on a trend line. Yes, it did leave equal lows. From today into next week, it might reverse, and then you see a Monday, right? Because then the weekly, we have to look at the weekly candle. How would the weekly candle close if that's the case? It'll probably close a little bit bearish, and then next week manipulates the low and then bounces. That's option bearish. Now in the bullish scenario, which is what I personally hope happens, look at the candles. They're telling you everything. Look at the equal lows. Okay, so look at these candles right here. These are equal lows. This one, yes, so far it's been going up. This is the area where I say, right, that it might want to retest and then come back. And if that is the case, it'll close bullish. Or even if it doesn't close bullish, if it contracts into this sort of squeezing format, then it's loading. It's really a powerful slingshot that's coming, and that's why I'm telling you something big is going to happen. It has to happen, because that's the only way that they can justify for gold to go up to these highs. Look at the daily time frame, also marks that almost perfect resistance. That is a big magnet. So I think today might be that day in which it slingshots back up. And analyzing now the bullish, I go in the 4-hour and I say, look how the candles are closing. Where is the strength? In the 4-hour time frame so far, bullish is the strength. This big bullish engulfing candle closes above these ones, above this high. And you see this imbalance gets respected, and it's used as a trampoline, boop, and it closes back above these. So that is a bullish structure. That's a bullish trend within this. And then look at this right here. The market has broken out of this sort of trend line. I'm looking at the bodies. Remember, the bodies tell the bigger story, the more important story, and so far that trend line has gotten broken. So if New York sells and it fails to trade lower, what we're going to use is all of this area as a buy area. And what I'm going to do is we're going to measure it with the Fibonacci. I want to see the low and the high. We're going to measure it and from a premium and discount perspective. Okay, so this is the premium, and the 50% is where I'd want to see a rejection within the New York session. So if we zoom back down in lower time frames, here we are. I know there's a lot of rectangles, but bear with me, and I'm gonna maybe start hiding these things so that you can visualize it a bit better. Here we are. Nope. This one, hide. I'm gonna hide this one. Okay, so where am I? Here it is. So these lows, we're not gonna pay attention to them. I want to see the 50%, and notice how that's been a pivot area. When I say pivot area is where price has been for support, then resistance, then support, then resistance, and it kind of dances like a snake around a stick. That is a big pivot area, and so it's likely that if price gets there, it'll probably bounce. It has to show at least a sign of rejection, and you could, at a scalping level, when price touches that area, you can buy simply because of probability and just target like 20 pips and you got it, right? That's another rabbit hole. But basically, we have that range, right? And because we're in a bullish trend, because we've seen bullish momentum, because price already manipulated previous day's lows and closed back above, it's targeting the highs. And so these highs right here are target, potentially these candles, the bodies, and obviously this high. Now, of course, it's not going to go straight up there, right? New York, like I said, is going to say, hey, we're going up. Okay, let me, wait for me. I'm going to make sure this thing induces sellers. I'm going to shake everybody off. And just when everybody's thinking is going to come down, whoop, we're going to reverse. So that would look something like this, where price just starts coming down quick. And then right around here, it rejects. We probably see a V shape. And then it bounces back quickly. Whether it's going to go all the way back up there, doesn't matter. If it does, it can stay like this throughout the day. If that happens, then next week will probably be bullish, because today wouldn't be a day in which it reversed. It simply grabbed liquidity and bounced. So today the price is coming down, but if it bounces, then it's like, oh, okay, that's the story, right? You're trying to question the market, right? Like, so what did you do today? It's like, I sold. But if in reality it bounced and respected bullish structure, you can say, I'm not buying that story. And you see price kind of funneling up toward that resistance, so to speak. You see this? If I mark this now with a line, right? Something like this, that would be interesting. That would be very interesting, because now that looks like it's a slingshot. It's loading. Higher lows, equal resistance. Out of nowhere, it could pop. Okay. Of course, if the opposite happens and it breaks structure and you see it respect previous area like this one, then you just simply adapt. And then obviously that's not the story. And let's say price does this. Simple. That's, there's no need to overthink things and complicate ourselves. But as long as you have these setups, so to speak, or this map, right? You're mapping the market. You're putting those areas of interest where you want to wait and see how price reacts. And again, initially, this is an interesting area where I'd want to probably see a rejection, and then this one, because if this doesn't hold, this one right here, if that doesn't hold, we're coming down here. If I see a bounce there, we're gonna come back up here, whether that happens today or next week. But this is your most important range right now, from where it's at the time you see this video and into this 50%. I know I'm extending myself, and I might have to publish this somehow somewhere else so that you can watch this. but I felt I had to extend myself a little bit to explain the different scenarios, the reasons why each scenario could play out, how it could play out. And one last thing, should New York fail to reverse all the way down here, what they might want to do is continue to manipulate into these highs and then reverse their session and probably close something like this. Okay, so be patient for New York, wait for the opening, see the structure, how it is, and secure profits. Seriously, like that's what you got to do in these conditions when price is ranging so volatile, right? It's really uncomfortable. I know we've had cleaner setups. We got a good trade yesterday, so I hope you caught that. But regardless, um, again, this area of 3358, 3360, interesting area to sell if we see the A shape target the 50% of Asia's range in extension, the low into this imbalance. That's your trade, your short trade today. Bullish trade would be if you see rejection at the 50%, you manage to get a short. Don't be afraid of buying it again. If you see rejection between 9:30 or 10 or 10 and 11 and price comes back up, it'll create that reversal and you could target the 50% of the drop, which would be a very, very high probability trade as well. If you see rejection, buy it and then get out here, because if you see 50% matches the areas where it's previous support, and those become future resistance in a bearish trend. Okay, 21 minutes. This was a great daily outlook. I hope you've enjoyed it. I might publish this on YouTube so you can watch it over and over and over and over and over and over. Take care.